IonQ is one of the more innovative companies in the world today. The company is pioneering quantum computing technology for applications in enterprises worldwide. But before the company can grow into an effective and growing business, the finances need to be there. Early days require investments in these growth opportunities, and then these growth companies can reap the benefits of these early investments. So a company, its financial position is critical, and that's what I wanted to get into in this video. I wanted to dig a little deeper into IonQ's finances and its financial position and whether or not it's a risk for IonQ stock investors. And so there's a lot to unpack here, so let's get into the details of this business. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Okay, so looking at the company's adjusted EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization, which the reason many companies like to report on this adjusted EBITDA number is because it's a close proxy to cash flow. Adjusted EBITDA tries to remove these costs like depreciation and amortization, which are non-cash expenses, also stock-based compensation, which is another non-cash expense, to give investors an idea of how much cash the company is going through in this early investment stage. And for IonQ, the third quarter, 23.7 million loss on adjusted EBITDA basis compared to 22.4 million loss in the same quarter last year. So not much growth there in terms of losses. They're not going backwards that significantly. Now, this is even more impressive because the company's revenue almost doubled year over year. So even though they're generating more revenue, it's not incurring more losses on the bottom line. And that's usually how a company starts on improving its profitability. When you compare adjusted EBITDA to sales, let's say you take last year's adjusted EBITDA and divide it by last year's Q3 sales number, that percentage of loss would have been much larger than if you compare this year's third quarter adjusted EBITDA number and you divide that by sales of this third quarter, you will see the percentage shrinking. So the company's losses as a percentage of sales are shrinking and moving towards zero and then eventually positive numbers, and that's good news. Another thing you want to know is taking the quarterly cash outflow or adjusted EBITDA outflow, in this case, let's say 24 million, and comparing it to how much cash the company has in the bank. And what we're trying to find out here is, are they going to run out of cash anytime soon? Is there any urgency to its cash needs? And so when you look at the balance sheet, the management team noted that as of September 30th, 2024, they had about $83 million, $382.8 million to be precise, of cash and equivalents in the bank. And so if we look at, $24 million of losses, let's round it up to 25 million. And we take that over 1 year, 4 quarters worth, that will mean 100 million in losses. And that will still be only a fraction of the 383 million they have. So if they stay at the current pace, which let's round up to 25 million, and let's round up the cash balance to 400 million, they have a long runway, right? 4 quarters will be 100 million, and then times 4 years for 400 million. So they have 4 years of runway at this current pace before they run out of cash. So that's very comfortable in terms of looking at these developing growth companies, these pioneering growth stocks. IonQ is in an excellent position financially. No risk there in terms of running out of capital. And this looks even better because the company says here that while they increased IonQ's run rate in recent years, meaning they're spending more money every quarter investing in research and development, they're offsetting that by beginning to collect large payments from IonQ's customers, including those who have purchased systems. And you will have noticed, if you watch my previous videos on IonQ's latest quarter, they secured a great deal of sales, or booked a great deal of sales in their most recent quarter. Revenue was only 12 million, but they booked something like 60 million in sales. So their bookings are growing much faster than sales are. And usually when IonQ books a sale, it asks for an upfront payment from that customer, and then bookings eventually turn into revenue. But so long as the company's bookings continue at this pace, which they said for this year, they're on schedule to book between 75 million to 95 million in new bookings. And so if they're getting down payments from those customers that are booking those sales, that's going to help offset the cash that they're spending on operations to build up the business, get it to a scale, get it to a level where they're providing more business applications, which will then unlock more value for this company. In another positive sign, the company says it's worth mentioning that a significant portion of our investment in setting up manufacturing is now behind us. So a lot of the cash that they would use and they have used in going into manufacturing, those are mostly behind them. They're not going to make anywhere near the kind of investment in manufacturing that they needed to make up until this point. So that's also behind them. And so collectively, if you look at all of that and you look at the company's cash position, you can feel comfortable with where they're at. Now it just depends on executing on your research and development, getting your research and development teams to produce products and services for businesses that are willing to pay millions and tens of millions, if not hundreds of millions of dollars for this technology. So now it's all in IonQ's research and development team. That's where the future of this company will rely on. It's not going to rely on investors giving the company money. They don't need any more money from investors. Sure, if they find an opportunistic way to raise additional capital, they'll take advantage of that. You probably noticed the stock price jumped, more than tripled in the last month and a half or so, up to $21 per share. They might see that as an opportunity to sell some stock, raise some cash, and further fortify this balance sheet that's already really strong. But they don't need to. They're not in a desperate situation. And that's precisely the position you want to be in if you're IonQ or if you're an IonQ investor. So they talked also about how they're going to scale. And they're going to get to scale by photonically networking their quantum computers together. And Quibitech is doing something similar, not exactly the same, but they have the same kind of skill set in their people. And the company recently told us about this acquisition. That's why I'm discussing it here, is because this acquisition was a large use of cash. But given that they had $383 million, and even after that, as of September 30th, they have $383 million. They used roughly $22 million in cash for this acquisition. And I always like what it says about a company when they use cash to make an acquisition. A lot of times when companies see their stock price soaring, they'll use their stock to make an acquisition. So they'll buy another company, but instead of paying that company cash, they'll pay that company in their own stock, because they might feel like their own stock is overvalued. So they want to use that stock as currency to purchase another company. But when a company chooses to pay in cash, they're saying that, you know what, we don't want to use our stock. We don't want to use that as currency. We think that's undervalued. We'd rather use cash instead of using stock to make this acquisition. So it's a positive sign usually for investors when a company chooses to pay in cash instead of stock. Overall, if you look at IonQ's financial position, solid. It's got what it needs to continue its research and development and get its products to market. So if investors were concerned about that, I don't think the company's finances are a cause for concern. There are other risks, right? Developing this innovative technology is very risky. There are other risks with IonQ, but the financial position is not on the top of that list. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.